Gold is being driven by things that are bigger than Trump, bigger than the White House. The central bank buying, the BRICS, de-dollarization, the fact that the U.S. froze and is in the process of stealing $300 billion worth of Russian-owned U.S. Treasury securities that were lawfully acquired. Well, you have to be in some because there aren't many good alternatives, but you're going to go to gold. So the gold trade, gold is going to go higher. It's bigger than Trump, is how I would put it.
Donald Trump secured the presidency by surpassing the 270 electoral vote threshold, with 295 votes to Kamala Harris's 226, according to the Associated Press. Following Trump's decisive victory, gold futures dropped Wednesday as bond yields, the U.S. dollar, and stock markets surged. As Trump's win influences the markets, gold prices will likely experience short-term corrections. Historically, gold often reacts to political shifts with initial declines before resuming long-term rallies. Jim Rickards considers the recent sell-off a temporary dip, suggesting that gold is influenced by factors far larger than Trump. The New York Times best-selling author believes that while this decline may be short-lived, he expects gold to strengthen significantly over the long term. Although Trump's policies could affect the economy, Rickards emphasized that gold is driven by forces much bigger than the Trump administration. James Rickards is a former lawyer, investment banker turned economist, and best-selling author with his finger firmly on the geopolitical pulse, and never fails to sort fact from fantasy and uncover the truth amidst the growing propaganda. Gold has seen a year-long rally fueled by increasing central bank purchases, geopolitical tensions, and falling interest rates. Many analysts believe these factors will continue, prompting projections for further gold price gains, with Goldman Sachs forecasting a rise to $3,000 per ounce by the end of 2025. However, the rally reversed due to fears that Trump's proposed tariffs and immigration policies could spark inflation. Rickards believes that gold's primary drivers are global, pointing to record central bank purchases, the BRICS nations' de-dollarization efforts, and rising doubts about the U.S. as a reliable reserve currency holder following the freezing of Russian assets. He concluded that these dynamics will increase demand for gold, stating, "The gold trade is going to go higher, driven by forces far larger than Trump." As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
I can't think of a better combination of things that are going to benefit under Trump. Automobile manufacturing, sorry, China, sorry, Mexico. Trump, and by the way, you have to know the people behind it. Robert Lighthizer, Peter Navarro. I mean, I know Peter personally, and I've spoke to other Trump advisors. Um, they're going to pound foreign imports of cars with tariffs. Like, yeah, I sound like Trump now, but like you've never seen. And Mexico is not going to get off the hook under well, it's the USMCA now, the updated version of NAFTA, but basically it allows Mexican cars into the U.S. without tariffs. But a lot of those Mexican car plants are owned by China. Trump's going to single them out, put huge tariffs on them. So what they're saying, they're not saying we're against foreign investment. They're saying you, China, Japan, Korea, whoever you are, you can sell cars in the United States, but you have to make them here. You're going to have
Well,
to open plants. So that's going to be a big plus. Cryptocurrency, I'm not a fan, but markets are markets. Bitcoin's way up. Banking and finance, and trucking and airlines. If you lower energy costs, which Trump will, then their margins will go up. So there are a lot of sectors that are going to benefit. Yeah, because they have to finance all this. You don't have to be speculating or use leverage anymore. You can just be a good financial intermediary. Yeah, gold is going to get a lot stronger, and it's not like we're not going back to a gold standard or anything of the kind. But here's the thing: gold is being driven by factors that are bigger than Trump. Presidency is a big deal. Looks like the Republicans might have what we call a trifecta, where you get the White House, the Senate. The Republicans have the Senate. House is still close, but it looks like they'll get the House, maybe only by a few votes. That's the trifecta when you have the White House, the Senate, and the House of Representatives. And then that means treaties, tax reconciliation, Supreme Court appointments. There's a whole bunch of things that you can get done if you do that. And none of it's bad for gold, but it's not really pertinent. But gold is being driven by things that are bigger than Trump, bigger than the White House. The central bank buying, the BRICS, de-dollarization, the fact that the U.S. froze and is in the process of stealing $300 billion worth of Russian-owned U.S. Treasury securities that were lawfully acquired. If you're anybody, China, Saudi Arabia, Taiwan, Japan, anybody, you say, hey, you guys, the United States, just stole not froze, but stole $300 billion of Treasury securities. Why do I want to be in Treasuries? Well, you have to be in some because there aren't many good alternatives, but you're going to go to gold. So the gold trade, gold is going to go higher. It's bigger than Trump, is how I would put it.
The Federal Reserve approved its second consecutive interest rate cut on Thursday, opting for a more measured pace in its ongoing monetary policy adjustment. Gold prices rose in response to the Fed's quarter-point rate reduction. Chair Jerome Powell indicated he wouldn't rule out or in another cut in December, pointing to recent indicators that the economy is still showing solid growth. A softer dollar, resulting from the rate cut, enhances gold's appeal to international buyers, providing some support for the metal. However, the long-term effects of the new administration's policies remain uncertain. Jim Rickards expects the Federal Reserve to maintain its current trajectory, likely implementing a 25 basis point cut today and another in December. While these rate cuts may attract headlines, Rickards emphasized that they are just a small part of a more extensive economic landscape. He noted that the Fed chair's term ends in early 2026, but Trump's influence on future appointments to the Board of Governors could be significant. Rickards concluded, with appointees who have a favorable outlook on gold, this shift could be very bullish for the precious metal. Now let's redirect our attention to a video.
Right. Usually the Fed is like all the headlines. Well, no one's even thinking about the Fed. I do because I read a newsletter. Uh, yeah, here's the thing, Danielle, and I'll answer the question directly. It doesn't change anything. The Fed is going to raise interest rate, or sorry, cut interest rate. I misspoke. Fed's going to
Yeah.
cut interest rates 25 basis points tomorrow. They're going to cut them another 25 basis points in December. They're on a path. It's not, it's the no drama Fed. They're going to keep lowering interest rates. That's not necessarily a good thing, by the way. Everyone's like, oh, well, the Fed's cut rates, it's stimulus. They are cutting rates, but it is not stimulus. Cutting rates is something that goes hand in hand with an economic slowdown or a recession. So we'll see how Trump's policies try to turn the recession around, but that's kind of baked in the pie. The U.S. economy is slowing very, very dramatically. So if you ask me what the Fed's going to do, it's easy. They're going to cut 25 basis points today and again in December. They're on that path. But if you ask me if that's stimulus, I would say no. The Fed is almost irrelevant in the stimulus debate. They put on a good show. I'll give Jay Powell credit. He's a smart guy. He's a lawyer, not an economist. But it's not. I do watch it and I write about it and I analyze it, but I focus much more on commercial banks, productivity gains and things like that. Governors have a 14-year term, but the chair has a
Right.
4-year term. His term expires in early 2026. Now, the question is, can the president fire the Fed chair? Well, it's never happened. They sort of like pull the rug out from under them. Their term expires, they leave, pick a new chair, fine. But there's never been a Fed chair who was fired in midterm, and it's not even clear you can do it. But I don't think Trump's going to try. The clock's ticking. Powell's had 2 terms. He's on his way out in 2026. Why pick that fight if you don't have to? But where Trump will prevail, and I think here's the big story, Danielle. There's rotation. There'll be vacancies on the Board of Governors, and look who Trump appoints to the Board of Governors. You're going to see, and this is not a hard forecast, but you're going to see names like Judy Shelton, Monica Crowley, and others who are very pro gold. Wouldn't we love to see Ron Paul on the Federal Reserve Board? I don't think he'll do it.
Hey, you never know, Jim.
But well, this is where the not to get too deep in the weeds, but this is where the
Yeah.
Senate is a big deal because the president can make appointments, but the Senate has to approve it. And if you have 51 votes, there's always a flaky Republican somewhere, Lisa Murkowski, who's like, playing footsie with the Democrats. But if you get to 54, which I expect, you can even lose a vote or two and still prevail.
The long-term outlook for precious metals looks promising, but it's crucial to recognize that markets can experience volatility and unexpected events can influence prices. As the market evolves, it's vital to track key economic indicators, geopolitical shifts, and central bank policies. By staying informed and maintaining a disciplined investment strategy, investors can navigate the complexities of the precious metals market and take advantage of future opportunities. What events or trends do you think could drive precious metal prices higher or lower in the near term? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.